Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if McCormick stock is a buy. McCormick, stock ticker symbol MKC, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Before we get started, special thanks to everyone who voted in the poll for the McCormick video. This one is for you. Let's explore some background info on McCormick. McCormick was founded in 1889 by Willoughby McCormick in Maryland. This flavor company is more than just the namesake spices. They also feature several iconic brands including French's Mustard, Frank's Red Hot, Lawry's Seasoned Salts, Zatarain's, Cholula, and even Stubbs barbecue sauce. These popular products can be found in over 170 countries, making McCormick a true leader in the flavor game. Today, McCormick leverages their more than 14,000 employees worldwide to promote their iconic brands. Now let's look at the price action. Starting with the 1-year chart, we see that McCormick had a CAGR of about -15%. Zooming out to the 5-year chart, we see that McCormick had a CAGR of -1%. McCormick share price has been falling steadily over time with a massive pullback in Q4 2023. If we perform a backtest comparison of investing $10,000 in McCormick versus the S&P 500, we find some weak results for McCormick. In that comparison with the S&P 500, $10,000 invested in McCormick would have grown to just $10,683 or a 1% CAGR versus $20,650 or a 16% CAGR if invested in the S&P 500. This demonstrates underperformance for McCormick. However, a McCormick investment would have been more volatile with a 24% standard deviation versus 19% for the S&P 500. McCormick also underperformed the S&P 500 in terms of the best year performance, for which McCormick grew 24% versus S&P 500 31%, but outperformed the worst year performance where McCormick fell only 16% versus the S&P 500 18% fall. In terms of max drawdown, McCormick fell 35%, more than the max drawdown of 24% for the S&P 500. McCormick also underperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Now let's hop over to market share and take a look at McCormick's market share. So we come over here and type in the ticker symbol for McCormick and see that the market share is 0.74% out of the publicly traded food, beverage, and restaurant stocks currently in the market. McCormick occupies a small, but important share of the market. The 5-year market share CAGR for McCormick is -1%. This means that McCormick's market share is shrinking, which is bad news. If we start in 2019, we see that the market share was 0.79%, rose to 0.82% in 2020. Since then the market share has fallen with 0.81% in 2021, and 0.74% in 2022 and over the trailing 12 months. Though the market share at McCormick has fallen over time, there does not seem to be a rapid fall, which may indicate a possible reversal of trend. Let's take a look at the fundamentals. Gross margin is 37%. This is on par with similar packaged food companies. Revenue has compounded at around 6% over the past 5 years and has reached over $6.6 billion most recently. Whoa, spicy. Looking at cash flow, we see a 3% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 14% CAGR. As a result, free cash flow has barely grown over the past 5 years. Capex growth has slowed since 2021 and McCormick is generating more operating cash flow. Despite this, free cash flow is not doing great. Weighted average shares outstanding has increased over the last 5 years, going from 268 million shares in 2019 to 270 million shares most recently. McCormick has actually been diluting shareholders. While the dilution is very minimal, it is unclear why such an established company needs to dilute its shareholders. Now let's view return on invested capital. Return on invested capital has fallen from 8.6% in 2019 to 6.5% in 2023. This is not good. McCormick has become less efficient in driving profits from its investments, though this trend seems to have bottomed in 2022. Let's hope that this metric continues to improve. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 37 days in 2019 to 45 days most recently, McCormick has gotten less efficient over time. Similar to return on invested capital, cash conversion cycle hit its worst value in 2022 and has been improving since. Perhaps better days are on the horizon for McCormick. Now, let's look at McCormick's debt. The net debt to EBITDA has increased just slightly over the past 5 years, going from 3.7 in 2019 to 3.8 most recently. The company seems to be focused on reducing its debt. Last, let's explore dividends. Current dividend yield is a healthy 2.58% with a dividend payout percentage of 64%. McCormick is paying out dividends that its earnings can support, though the payout ratio is a little high for me. Hopefully the company's dividend practice should be sustainable. Dividends per share for this company have grown at an 8.7% dividend per share CAGR over the past 5 years and an 8.8% dividend per share CAGR over the past 10 years. McCormick's dividend is steady and consistent. The fundamentals of McCormick are reasonable. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for McCormick. It is a food company with a gross margin of 37%. The 5-year revenue per share CAGR is 5% and the 5-year free cash flow per share CAGR is 0%. Revenue is growing but the free cash flow per share has not changed in 5 years. Sheesh. A return on invested capital of 7% is low but may be turning around. Next, the cash conversion cycle of 45 days is a bit high but seems to be improving. Concerning debt, a net debt to EBITDA of 3.8 means that it would take McCormick nearly over 4 years of earnings to pay back their debt. This is not good, but I have definitely seen worse. So from a fundamental standpoint, McCormick is subpar in my opinion. Now let's switch our attention over to valuation. McCormick is fairly valued relative to the S&P 500 with a ratio of 1. The price to earnings growth, or PEG ratio, is 3.4, indicating that McCormick is overvalued relative to their projected earnings growth. McCormick has been a public company for a very long time, weathering many global conflicts, recessions, and evolving consumer habits. Given that track record, I do think the company will survive another 10 years and have no concerns about it going out of business. Dividend investors will love the steadily growing dividend and its dividend aristocrat status. Some investors are very bullish on the company. Super investor Terry Smith holds an over 5% position in McCormick worth about $1.4 billion. Whoa, that is a ton of conviction, Terry. However, I am not sure what the allure is for him. McCormick has shrinking market share, stagnant free cash flow growth, and a low return on invested capital. The company is clearly in its cash cow phase and I don't see any way to growth without acquisitions. Speaking of acquisitions, Kim Kardashian's investment in Truff, the luxury condiments brand, may find McCormick a nice target acquirer. For me, I will pass on adding McCormick to the watch list. Many thanks for watching. What do you think about McCormick? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.